Have you ever noticed how no matter how much you earn, it sometimes feels like you're still running in place? That paycheck comes in, bills get paid, lifestyle improves slightly, and yet at the end of the month, there's barely anything left to show for it. It's subtle, it's quiet, and it's a trap most middle-class professionals fall into without realizing it. Let's take a typical example in the United States or Europe. Imagine you're in your late 20s or early 30s. You studied, found a stable job, and are doing okay. Maybe your salary is $60,000 a year in the US or 40,000 euros in Europe. On paper, that feels comfortable. After taxes, your take-home pay is very different. In the US, $60,000 becomes roughly $46,000 in your bank account, around $3,800 per month. In Europe, 40,000 euros might translate to about 2,700 to 2,800 a month, depending on local deductions. Now, reality steps in. Expenses and pressures. Your rent or mortgage quietly consumes the largest portion, $1,500 to $2,000 in most cities, or 1,000 to 1,600 euros. Your car payment, insurance, and fuel take another few hundred. Student loans still need to be paid, credit cards continue charging interest, and suddenly that comfortable salary feels tight. Then there's lifestyle pressure. A slightly nicer apartment because you can afford it now. A newer car, better clothes, more eating out. Small upgrades that feel natural, even necessary, but quietly add hundreds to your monthly expenses. Here's the hidden mistake. Most people treat higher income as permission to increase fixed costs, not to increase flexibility. Let's break it down with simple math. Suppose your take-home pay rises by $1,200 per month after a raise. Your rent goes up $700, your car upgrade $300, and lifestyle spending creeps up $300. That extra $1,200, it disappears entirely. Not wasted, it's absorbed into obligations. Psychological angle. Why does this happen? Human psychology is key. We don't measure comfort or happiness in absolute numbers. We compare ourselves to others, coworkers, friends, social media peers. A higher income often changes who we compare ourselves to, not how secure or free we feel. So even with a raise, anxiety and financial stress often increase. Long-term impact. Over 10 years, this quiet trap compounds. Income rises, lifestyle expenses rise, debt persists, savings stagnate. You may earn more than ever, yet have little to show for it. Limited savings, minimal financial flexibility, and very little control over your time. At that point, earning more simply becomes necessary just to maintain your standard of living. The financially intelligent perspective approaches this differently, not because they're smarter or stricter, but because they frame the problem differently. They don't ask, how much can I afford now? They ask, what does this commit me to each month, even on a bad year? They understand that money's power isn't in luxury, it's in margin, the ability to say no, to slow down, to absorb unexpected events without panic. When their income rises, they increase flexibility, not fixed obligations. They quietly grow savings, extend time horizons, and expand options. Conclusion. The trap isn't obvious, it doesn't feel dramatic, but recognizing it changes your relationship with money. Income alone won't solve it, behavior does. Earning more money helps, only if your choices preserve margin, not obligations. If this perspective helped you think about money more clearly, consider subscribing to follow for more practical finance insights.